You know, there's good news and bad news to this time of year. The good news is spring is around the corner. The bad news maybe is that spring also brings with it tax time. But no worries for us this morning because Jay and Brittany Hagee are here with Alon Planning Partners. Good to see you.
Good to see you as well.
So really, I've known you both long enough to know that y'all kind of talk taxes all year long because you're paying this year's, but you want to, or last year's, but you want to get people thinking ahead of how to avoid maybe some mistakes.
We want to make sure we're not just paying taxes, but we're planning for taxes. And so we want to have a year-long conversation. We want to have a multi-year conversation because a lot of times, you know, especially those we work with that are in that retirement red zone window, maybe you're 5 years, 10 years out from retirement, or even if you're younger, you want to save as much as you can on taxes, right? But especially in retirement, you think, well, my tax bill will be lower in retirement, but a lot of times you're surprised to find your tax bill is not dropping, or it remains maybe even a little bit higher because of some things like required minimum distributions. So we want to make sure that we're planning ahead for taxes and make sure that there's no mistakes that you make now that will cost you later in the future.
So I love the last time when y'all were here and you talked about kind of like 5 ways that people can more easily talk about money. Couples can talk about money. You break it down. So are there kind of some common mistakes that people make when it does come to the taxes?
Yeah, there really are. And I think the first one is actually not planning for taxes, but just paying them, right? So just stroking the check when it's time to pay taxes for last year, instead of strategically looking at how can I lower my tax bill, not just this year, but 4 years, 5 years, 6 years down the road, when I get to retirement, what does that look like? So that's a really big one. And I think really the other one I want to make sure we get to talk about today is how taxes really impact the rest of your financial picture. Where a lot of times I think folks look at taxes as a silo, like this is just something I have to take care of every April, and I just do it because I'm required to, right? But the decisions you make regarding your taxes impact so many of the other pieces of your financial plan.
Can you elaborate on that a little?
Definitely. So Medicare is one of those examples. If we're implementing some tax strategy like Roth conversions, taking dollars from IRAs and putting them into these tax-free accounts to grow tax-free, like a Roth, if we make conversions like that, some folks will say, we had somebody come to us, for example, a few weeks ago and say, hey, I want to take my IRA and just convert it to a Roth. It was like $300,000. We had to walk them through that process. You can't take that $300,000 all at once. That's going to be a taxable
huge
event.
Tax liability.
But a lot of folks make those decisions thinking, hey, this is a good thing for me to do this, but they don't understand the domino effect it has on other things. For example, Medicare. Medicare is income-based. So if you are in retirement, and you are making conversions or adding to your income, I don't care if you're making money through a job or making conversions from IRAs to Roth accounts, you're adding to your income.
And if you go too high, you're locked into a new Medicare premium.
It heightens your Medicare premiums
significantly.
And they're very significant.
Hundreds
it can be
and
anywhere
hundreds,
between
thousands of dollars.
$800 and $8,000. You know, it's a very wide range.
So in the course of this person, did you end up, will you make the conversions but over time?
Exactly. We use what's called a Roth laddering strategy, where we convert a little bit every year for a number of years, and we use the tax brackets to tell us how much we can convert to ensure that they're not bumped up and overpaying in taxes. Because obviously the goal here is to pay as little tax as we can and to keep more money in your pocket.
So one thing y'all do, Jay, is you don't work just with retirees. You also work with people who are in their 30s right now who are planning and doing this. If you have the option to invest in a Roth 401k versus a traditional, should you do it, and can you exclusively do it?
Right. Well, we encourage folks to invest in a Roth, but we also look at tax implications because the Roth means you're paying taxes now. So you don't have to pay taxes later. Well, you may be in the highest wage earning years that you're ever going to be in right now, so it may be good to split some of that, put some in a traditional, put some in a Roth. We want to make sure that everyone's contributing something to a Roth, but whether that's exclusive or not really depends on your income level. And so we talk that through individually. So
and there are
everybody that walks
thresholds.
in.
Like not everybody can even contribute to a Roth. That's important to know too,
True.
because you can make too much
Right.
unless you have a Roth option within your 401k.
I do want to hit one more mistake, though, that we see a lot. And really quickly, the last mistake we see is people taking from the wrong buckets through retirement. Because you have tax-free buckets in the Roth we're talking about, you have tax-deferred, like an IRA, a 401k, and you have taxable accounts, which are like brokerage accounts that you would just have, or your cash accounts. You can take from the wrong buckets at the wrong time, and it costs you thousands of dollars in taxes. So really coordinating how you take your withdrawals through retirement can save you thousands in taxes and allow you to even do things like Roth conversions.
Which really means if you've got it in the right hands, when you maybe need some money, you don't have to figure out that bucket.
That's right.
They contact
That's
you,
what we do.
y'all know the right bucket.
That's right. Because we're not looking just at a single need, like, oh, you need money, okay, just grab it from wherever.
Sure.
We're looking
Right.
at how that one decision impacts the big picture, comprehensive planning.
Right. Gosh, there was a question on my mind that I wanted to ask you, but I've forgotten it. It just went poof because I was hanging on to every word. In terms of getting in touch with you, I mean, because you are financial planners,
Absolutely.
you are not accountants.
That's
so
right.
even though we are here in tax season, people can still call you, right?
Yes,
Absolutely.
definitely. And we actually have a resource we want to tell folks about today. If you visit Exchange My Tax Bill, again, exchangemytaxbill.com, you can use that resource to really help you begin the conversation around taxes. You put in just 2 or 3 minutes of information, and it's going to give you a report to show you your taxable liability.
Okay.
What you actually would owe in taxes upon retirement.
You made it not so scary.
That's
Great place
right.
to
We
They
try to.
always do. Alon Planning Partners, alonplanning.com is their website. Thank you both.
Thank you.
Thank you.
I wonder what I was going to ask you. It just went poof.